ByteDance just found a way around American chip sanctions. The new Chevy Bolt has a secret Chinese battery that outperforms GM's expensive EVs. Volvo is killing its most affordable EV in America. And Tencent just posted massive AI-driven profits. Let's get into it. ByteDance, the company behind TikTok, has figured out how to get NVIDIA's most advanced AI chips despite American export restrictions. According to the Wall Street Journal, ByteDance is planning a massive AI hardware build-out in Malaysia through a cloud partner called Aulani Cloud. We're talking about 500 NVIDIA Blackwell computing systems. That's roughly 36,000 B200 chips. If this goes through, the hardware could cost more than $2.5 billion. Here's why this matters. U.S. export restrictions prevent direct sales of advanced AI chips to China. But those rules allow cloud infrastructure to be built and operated outside restricted countries. ByteDance can use these offshore data centers for AI development and international customers without technically violating American sanctions. NVIDIA confirmed that this arrangement is legal under current rules. Chinese tech companies have reportedly placed orders for more than 2 million H200 chips for 2026, far exceeding NVIDIA's supply capacity. When companies can't buy directly, they find workarounds. And those workarounds are getting increasingly creative. General Motors has a dirty little secret. The new Chevy Bolt, their most affordable EV, charges faster than their more expensive vehicles. And the reason is a battery from China. Unlike every other GM electric vehicle which uses the company's modular Ultium battery system, the new Bolt gets a lithium iron phosphate pack from a Chinese supplier. This design choice wasn't about cost cutting. It was about performance. The Bolt charges from 10 to 80% in just 26 minutes. Compare that to the Chevy Equinox EV, which takes 40 minutes for the same charge. The difference comes down to voltage. GM's modular approach forces compromises that work across their entire vehicle lineup, from compact crossovers to the massive Hummer EV. The Chinese LFP pack was designed specifically for the Bolt with no compromises. This is the first time GM has used lithium iron phosphate batteries in a US vehicle. LFP technology is cheaper, more durable, and lasts longer than nickel-based alternatives. Chinese battery makers have spent years perfecting it. Now that technology is making GM's cheapest EV their most impressive for road trips. Volvo just announced it's pulling its most affordable electric vehicle from the American market. The EX30, which starts under $40,000, will be discontinued in the US after the 2026 model year. The timing is revealing. US dealers were informed on Friday that all current orders will be fulfilled, but production for America winds down after summer. Dealers have until March 20th to place final orders. Volvo's official explanation cited shifting market conditions and financial factors. But let's be honest about what's really happening. The EX30 is built in China. And American tariffs on Chinese-made vehicles make it nearly impossible to sell profitably. The EX30 will continue in Canada, Mexico, and globally. Just not the United States. When asked if the vehicle might return, Volvo said they would continue to monitor market conditions. Translation: if American trade policy changes, they'll reconsider. For now, the company is pushing customers toward the upcoming EX60 and existing EX90, both built outside China. This is what trade policy looks like in practice. A popular, affordable EV becomes unavailable in the world's largest car market because of where it's manufactured. Tencent just reported fourth-quarter earnings that show how deeply artificial intelligence is reshaping China's tech sector. Net income jumped 17% to 64.7 billion yuan, roughly $9.4 billion US. Total sales hit 194 billion yuan, a 13% year-over-year increase. The company credited the AI boom that's fueling a frenzy across China's tech industry. Tencent has been integrating AI across its products, from gaming to cloud services to its WeChat super app. The results largely matched analyst expectations, which itself is notable. After years of regulatory crackdowns that hammered Chinese tech stocks, Tencent is showing it can still deliver consistent growth. The AI wave is lifting all boats in China's tech sector. Companies that struggled during the regulatory storm are now riding the artificial intelligence boom back to profitability. Tencent's results suggest that wave has plenty of momentum left. Southeast Asia is in the middle of an AI infrastructure gold rush, and Chinese companies are major players. The region now hosts some of the highest densities of data center infrastructure on the planet despite one major problem. It's incredibly hot. Singapore alone has over 70 data centers with more than 1.4 gigawatts of capacity. But sitting 1 degree north of the equator where temperatures rarely drop below 25 degrees Celsius makes cooling a massive challenge. Cooling can account for up to 40% of total energy use. Chinese companies including ByteDance and others are building facilities across Singapore, Indonesia, Hong Kong, Taiwan, and mainland China. The key innovation is engineering specifically for tropical conditions. Higher operating temperatures, liquid cooling, smart thermal management, and seawater cooling systems. One company is even building a floating data center cooled by seawater, the first of its kind in Asia Pacific. As AI workloads become more power-intensive, the engineering challenge only grows. But Chinese data center operators are treating the tropical climate as a design brief rather than a barrier. They're proving that advanced AI infrastructure can be built anywhere with the right approach. As gas prices surge past $3.60 a gallon amid the Middle East conflict, something interesting is happening. Searches for electric vehicles are spiking. Edmunds reported that electrified vehicles jumped from 20.7% to 22.4% of all vehicle searches in just 1 week. Most of that increase came from full EV queries. This tracks with what happened during the Ukraine invasion in 2022 when EV searches jumped from 17.5% to 25% within a month. Here's where China's strategy pays off. While American consumers are searching for EVs, Chinese consumers already have them. China spent decades and hundreds of billions of dollars investing in electric vehicles. Now more than half of new car sales in China are electrified. When oil prices spike, that investment acts as a buffer. Chinese demand for refined oil actually fell last year for the second straight decline. Experts say China's oil and gas consumption has peaked. Meanwhile, American consumers are stuck with the same vulnerability to oil shocks they've had for decades. The difference isn't technology. It's infrastructure and policy. China built the charging networks, subsidized the vehicles, and created the manufacturing base. Now they're insulated from global energy chaos while everyone else scrambles. That's it for today. ByteDance finding creative workarounds to chip sanctions. Chinese batteries outperforming American engineering. Volvo pulling out of the US market. Tencent riding the AI wave. Southeast Asia's tropical data center boom. And China's EV advantage becoming clear as gas prices surge. If you found this useful, subscribe for more China tech coverage every day. See you tomorrow.